Hey guys, Nick here from Nick's Taxes, and today I want to talk about a stock that I'm really excited about because of some recent news that just came out, and it's really undervalued right now in my opinion, with a chance to be a great growth stock for the next 10 years, and that is Callaway Golf, trading on the New York Stock Exchange for around $15.64 in USD. Back in January, pre-pandemic, it was selling above $20, and obviously with the rest of the stocks has taken a dip, but now rallied back into the $15 range. And I think $15 right now is a great price point to get in, because Callaway just announced last week that it bought TopGolf for $2 billion. And why I'm really excited about this is because I think TopGolf is a great growing company that is really going to help Callaway kind of explode in the sports and entertainment industry, and their stock price will follow. What's really intriguing about the TopGolf purchase is that it was bought at $2 billion, whereas just at the beginning of this year, TopGolf was talking about issuing an IPO, an initial public offering, at the $4 billion range. And so Callaway is essentially, in less than 1 year, getting this for a 50% discount, according to what other analysts were thinking at the beginning of the year, obviously pre-pandemic. But from $4 billion down to $2, I think Callaway is getting a steal in TopGolf. TopGolf obviously is one of these up and coming growing companies in the sports and entertainment industry. Their numbers have been great. Callaway was actually already an investing partner with TopGolf, owning around 14% before they decided to buy the majority of the company. And the deal is expected to close in early 2021. It's not official yet, but they got to go through all the administration and paperwork and whatnot. But TopGolf's revenue in 2019 was $1.1 billion. They had over 23 million guests come in 2019, of which over 50% identified as non-golfers, which I think is huge. That's potential from turning people into non-golfers into golfers. And what are they going to do after going to TopGolf is they're probably going to buy Callaway golf clubs. Callaway obviously is a huge major player in the golf industry. It is one of the biggest. So Callaway's looking to kind of turn some of these non-golfers that are just there for fun into actual golfers, and to obviously buy Callaway equipment. If you're big into sports and into golf, you'll know that golf had a huge spike this year because of the coronavirus. Actually, because everything was locked down, golf was one of the few sports that actually stayed open, and because of that thrived, because during the summer there was nothing else really to do. I know in my area golf courses were absolutely packed, and so that's great news for Callaway and for TopGolf, because the sport is growing, and the sport is growing in popularity, and it seems to be growing in the younger generation as well. And TopGolf is playing a major key in that. It's a very fun and entertaining place to go for young people who might not be into golf, and that's where you see that 50% that identify as non-golfers actually going to TopGolf, because it's a lot of fun. TopGolf has 71 locations in over 5 countries, and actually the CEO of Callaway mentioned that TopGolf is the best thing to happen to golf since Tiger Woods, and that TopGolf is going to be the largest sources of new golfers for the industry. And so that's a big statement coming from the CEO of Callaway. Callaway also in 2019 by themselves had over $1.7 billion in revenue. So if you combine that with TopGolf's $1.1 billion in 2019, I can see this company being easily $3 billion plus in revenue generation once everything goes back to normal. So that's no problem. The net income, though, that's going to be something that we're going to have to hold off and see what it's going to be like. TopGolf obviously is in the growth category, so they weren't worried about making a profit. They were working about expanding and growing their business. But Callaway, on the other hand, is a very profitable company, so we'll see what happens in the near future. Callaway alone before this purchase was actually increasing its revenue year over year by quite a staggering amount, and I'll put an image up here for you guys to see. And right now analysts have this stock with a 1-year stock price estimate of around $23.55. So if you compare that to the stock price right now, that represents about a 47% upswing in appreciation. So that's really attractive in just 1 year alone. All right, the last thing I want to look at is some ratios and compare them to the industry standards. And this is going to be another indication that this stock is currently undervalued. So the first thing I want to look at is the PE ratio. That's the price to earnings ratio. As of right now, Callaway's price to earnings ratio is about 16, whereas the sports industry average is around 42. So there's quite a bit of a difference there and a lot of value there in terms of the PE ratio. Now, if you want to go a bit further and go to the PS ratio, which is the price to sales ratio, some people actually prefer this ratio because it's a little bit harder to manipulate on your income statement, the prices to sales. So because it's a little bit harder to manipulate, it could indicate a more true performance of the stock. And so Callaway's PS ratio is 0.98, whereas the industry's average is 1.62. So both of these ratios, Callaway is underperforming the sports industry average, which means that they have an opportunity to increase their share price once kind of the market catches up. So because of the increase in the popularity of golf, because of the undervalued ratios, because of the 50% discount Callaway was able to get in purchasing TopGolf and the incredible growth opportunities that TopGolf represents, I think that Callaway is a great growth stock to buy and hold onto for the next 5 to 10 years. Now, I think it's going to be a little bit tough to say in the short term how the stock's going to do, especially given what happens with lockdowns and health regulations and all that kind of stuff. But within the next 5 to 10 years, I see this company growing revenues like crazy and being a great stock pick. So with that being said as well, if you're watching this video in Canada, this would be a stock that I'd look at buying in my non-registered savings account compared to my TFSA. And the reason why I'm going to do that is because the TFSA, I like to hold more safe or dividend kind of growth stocks within my TFSA because it's more of a sure thing. And I want to be tax exempt on things that I know are sure things. Or as close to sure things as I think it is. Growth stocks, a little bit more of a risky look. I don't mind holding in a non-registered account and then paying capital gains tax when I sell it. Capital gains tax is already a preferred tax rate in Canada. You're only taxed on 50% of your gains. If you have losses, you're allowed to offset your capital gains with your capital losses. So I just think these kind of stocks are ones that I like to hold outside of a TFSA or outside of a registered account, and I don't mind paying tax on at a later time compared to holding this within my TFSA. But hey, it's up to you guys, whatever you feel comfortable with. Let me know what you guys plan on doing in the comments below. Another big thing to say is their Q3 earnings is expected to drop on Monday. So I'm going to hold off on actually buying this stock. I'm going to see what its stock price does come Monday when they announce their earnings, their Q3 earnings. I don't expect anything crazy to happen, and I don't expect my mind to change at all regarding if I'm buying or not buying this stock. But I'm just going to hold off and see what management has to say regarding Callaway, just in case there's anything out there that might raise a red flag or might actually encourage me to actually buy more. But that's all for me today. I'm Nick from Nick's Taxes. Again, if you got value out of this video, I just ask that you give it a thumbs up in return or as payment for this video. And if you're new to the channel, hi, I'm Nick. Thanks for watching. Really appreciate you, especially if you've made it this far. Why not subscribe since you're already here and hit that bell notification as well to let you know when I release new videos. But that's all for me for today. Thanks so much again for watching, and I will see you guys in the next video. Happy tax.